Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In this video I'd like to look at some trade setups using the MTPredictor software program, again on a Forex chart. In this particular example, a chart of the euro against the US dollar using FXCM data from eSignal. So I'd like to go through and have a look at some trade setups. In fact, if we scroll back a little bit, the last day or so, we can see some different examples that I can talk through with you. The standard trade management guidelines suggest only trading in the direction of the large degree trend, which is shown by our STF indicator at the bottom of the chart. This is the colour. So if you're looking for sell setups, like we had here, a TS3 sell, we want the indicator to be either red, i.e. downtrend, or black, flat. So this trade setup was a valid trade setup, so let's put the analysis on. Right mouse click, select automatic analysis, click on the red sell bar because we're looking to enter a short trade, and instantly it gives you the correct position sizing, in this case for a 2% risk on a sample $20,000 account. Here I'm using a $1 pip value. You may be trading micro accounts rather than these normal mini accounts or different size. But anyway, the position sizing is calculated correctly for you to keep your risks small and under control. And here we can see at the first target the trade made a lovely plus 2.4R profit. So it was plus 2.4R. So I'm just going to note that down, plus 2.4R. Remember, we look at profits in terms of risk units. So a profit of approximately $950 was approximately 2.4 times greater than the initial risk of around $396 or $400. If I clear the chart off, you can see we had two buy setups, but for standard traders you'd avoided these because they were against a red STF. Advanced traders, there were reasons why you could consider these, and you can look into these when you become more advanced and comfortable with the software. But for now, standard traders will assume these were avoided. You then came in here to a DP sell. Again, the STF was red, so it was okay to take. Let's put the analysis on. And here at the first target, we came out with a plus 2.2R. So far, going very well. Two trades, two profits. Very nice indeed. The reason we come out at the target is because we look at the strength band, which is this line here, in relation to our STF indicator. If it's weak, in other words less than the strength band, then we come at our target, which we did in this case. If this was strong, i.e. beyond the strength band, then we'd look to use our ATR stop, which is our red and blue dots, to look to run the trade further, but that's not the case in this example. So let's move forward a little bit further. And here we have two triangles on the charts. Now these triangles are what we call history trades, and historical trades are where we can place the analysis on, as we do here. When you place the analysis on, you can see we entered into a new short trade, but that trade was stopped out. Every professional trader knows and understands that losses can and do unfold. However, the trick is keeping the losses small, and this is what I want to show you here. So the position sizing, again, varied the number of lots to keep your risk small and under control at what we call one risk unit. So do you remember before I was saying that we made 2.4 and 2.2R, in other words risk units? In this trade here you'd have lost one risk unit, so that would be minus 1R. We had another trade set up here, so let's put the analysis on again. Another trade set up here, and yes, that was ticked out, that was stopped out pretty much to the tick, which again is frustrating. However, the loss was kept small at minus 1R. So here we were, two profits, two losses, so 2.4 plus 2.2. Now this is the important point, minus 1 minus 1. So that's actually plus 2.6R profit overall on this little run of trades. So even though it's a 50% hit rate on this particular small sample, two profits, two losses, it was actually making good money overall. And that's the most important point that most amateur traders never seem to understand. It's not about having a high percentage of winners, it's about having the winners big when they come through and controlling your losses. That's what professional traders do to make money over time. Interesting enough, we actually had another TS4 attempt here. This time it actually nailed the high beautifully, and this time the the market dropped beautifully and then went down to our target there very, very nicely. This example, we'd actually gone past the strength band, so here we used our red dots for our ATR stop, and in fact the ATR stop would have stopped you at about here, so it was slightly less than the initial target, but still a good plus 3.1 R. So we add 3.1 to the 2.6 earlier, and that means plus 5.7 R profit just on this little run of trades we've had here. So even though it was not a high percentage of winners, not 80-90% winners, it actually still made very good money overall, plus 5.7 R. And in fact, that is the most important point with trading. It's not the high percentage of winners, it's their size in relation to the losses. And that's what we do at MTPredictor. We use position sizing to keep the losses small, and every professional trader knows and understands there will be losses. However, when the profits come through, the profits are much larger than the losses, and that's what makes money over time. That is the way professional traders look at trading the markets, and that is why I've done this little video here to show you an example where we had some good profitable trades and also some losing trades to see how we came out overall. Just want to have a quick look at what some professional traders do. Interestingly, the euro rallied up from this low here, so wouldn't it be nice to have caught that low in advance? Well, we do have some tools that can do that. If I go to advanced chart analysis and I put our decision point tool on from the last swing pivot, you can see this tool gave us a support zone on the chart in advance. So let's see what happened as we go forward. Well, lo and behold, the market came down here right into this low. Came right into this low here, right at that support zone. The market rallied up, and let's see where the market was meant to rally to. For this, again, we use the DP off the last swing into the low. So you just click on this high here, and this gives you a target again in advance. Do you see this, how this is in the chart in advance? If I scroll forward, just look how the market went up to that level, and look at that, it found resistance and is now backing off brilliantly. So these are some of the more advanced tools we have in MTPredictor that, as you can see, manage to nail these particular turns absolutely beautifully, but more importantly, these levels were on the chart in advance. So hopefully this has been a good video that's shown you some automatic trade setups on the software. We've had a look at some automatic trade setups over the last couple of days. We've looked at how to filter these in the direction of the trend. We've also had a look at how to keep your losses small and under control, and then how the profits are larger than the losses when they come through. And also we've had a quick look at some of these levels here for advanced traders that can actually project levels in advance. As you can see, I've managed to nail these turns brilliantly. So a good example of using MTPredictor on a Forex chart, in this particular example a 5-minute chart of the euro against the US dollar using FXCM data on eSignal.